We are up.
Perfect.
All right, present day class, I have two students with us. I have Ariana and I have Dion.
Good day, illustrious students, Ariana and Dion. We're about to go on a virtual field trip to PNC Bank. This is virtual field trip 3.3, and we'll do a little recap of what we went over yesterday, and we'll go over what we're gonna go over today. A reference to PNC Bank, the different funds that are available, and what goes on throughout the process of opening a bank account, and all those great things.
Well stated.
Roger, you have the floor.
All right, excellent. Well, hello, everybody. Welcome back. This is the second portion of really understanding part of the banking industry and what's available to you out there as far as it comes to the lending. And also understanding PNC as a background, which PNC is the bank I work for presently. We talked a little bit about PNC's background. You know, PNC it's a growing bank, one of the top 6 largest banks there is out there. Growing in 21 states, soon to be more than 21 states with the merger of BBVA. We did also talk a lot about, the locations, the ATMs that are located in a lot of our gas stations, Wawas and 7-Elevens. So PNC, as you know, is part of a larger system, financial system that's presently out there. So some of the questions that you typically ask, within the banking industry. So do you have experience working with internet companies? Okay, so these are some of the questions that you can ask to any of the bankers. I'm a business banker. Let me just recap that again. I'm a commercial banker. What I do is I handle accounts for businesses that have revenue of $1 to $5 million. Okay, so if you have revenues of $1 to $5 million, minimum $1 million to $5 million, then you have an appointed banker such as myself. There's 7 of us within the county, and then once you go above that $5 million mark, then you go into what we call corporate and institutional banking, which is the next level up. And they have a lot of these departmental pieces as far as banking is concerned, based on revenue, based on assets, that you could work up. And the higher up you go, the more one-on-one services that you receive at that point. Okay, so let's look into some of these questions here. So top questions to ask a banker: do they have experience working with the internet companies? Now, why is this such a big question? It's a big question because this is the age that we're moving into right now. Everything is being done online. Right now, we're conducting this class on a Google Meets. Zoom has done tremendous in the market condition that we've been now. You will see that from 2019 to the way business is moving forward is going to be conducted via internet now. Many things have changed completely. What does this do? This reduces costs for certain expenses because things can be done online. And most companies nowadays are starting online. They're internet-based companies. So it's important to understand that, does the bank can a bank cater to internet companies? I mean, how does that work? I mean, what's involved with that? What do we look for? How are the operations of that? So that's very important to understand. So that's one of the good questions to ask, just so you can get a better understanding. How many years have they been in the business? Now, why is this an important question? This is an important question because the more experience, the more tenure that you have in a particular business, the more you get sort of attention as far as when it comes to requesting a loan or additional financial assistance. Because bank wants to see that you can stay successful, right? It's really difficult to come into a bank and you just started your business within a month and really ask for a loan. It really is. Typically, we look for businesses to be in operation for at least 2 years. Want to see that you can actually increase your cash flow, get money coming in, get things going, increase your business up to a certain point within a 2-year time frame. Most businesses fail within a year, within 12 months. If you can get up to the 2-year mark and keep things afloat, then you get to a point where you want to take it to the next level. That next level is where you need some financial assistance. And at that point, that's when we kind of look and see where you are and then take it to the next step, right? Have they ever worked with a startup e-commerce company? Another good, important question. This goes back again to the internet companies, right? Where does the bank stand with that? And here's why this is so crucial. When we start talking about types of companies, banks, there are certain banks that don't bank, if you will, have deposit relationship with certain types of companies because they might be deemed high risk companies. Okay, companies that deal with a lot of cash as far as coming into the banking center, companies that may have other transactions that are deemed high risk transactions. So you want to ask these type of questions. An e-commerce company. How does the bank feel about e-commerce company? Have we worked with other e-commerce companies? Do you have in your portfolio or of clients other e-commerce company? Why this is crucial is because, again, you understand if your bank can cater to you. Secondly, you can also find out if they have other clients that are e-commerce companies, they have a better understanding of your company, of your type of industry, which you want, right? Are their fees reasonable? Again, going back into banking, asking about the fees that are associated with the types of accounts and relationships that you set up based on the industry. Fees vary from bank to bank, as you can tell with a personal account, personal and business accounts. Just about every bank, I'm not going to say every bank, but just about every bank nowadays, especially the large ones, require something to be done or kept in the account as far as a balance so that you're not charged a monthly fee. Okay. Long gone are the days where you could just open up a bank account and not be charged anything, with the exception of the student checking account. Student checking account, we understand you're students. So you start up an account, but once you get up to the age or to a point of graduation and you're in the workforce, something's going to be required. Either a minimum balance to be kept in the account, or it might be direct deposit. We know that we have money coming in on a specific time during the month. It's a cash flow coming in on a regular basis. If you have that, in many cases, some banks waive off the fee. If you have a credit relationship, like a credit card that you use on a regular basis, that will work as well. Okay. All right. Let's see here. Are their fees reasonable? Okay. Will they work with us financially if we can't afford their full fees in the beginning? So this is where we have what we call at PNC, what we do is we do a team approach. Okay. What I mean by that is whenever we get in a new client or someone that's interested in coming to the bank or starting a relationship with the bank, on the business side, and even on the personal side, we like to include our teammates. We call those eco partners. Eco partners are people that work and specialize in different areas. So on the personal side, you'll have a mortgage representative, right? Mortgage banker. They focus on strictly doing mortgages to purchase a home, refinance your home equity line. You have a financial advisor. This is someone that deals in areas of investment, retirement. Then you have someone that handles specialty type of banking. Specialty type of banking is special requests, like business bankers, for example. We have what we call ag bankers, agriculture bankers, right? We have physician bankers, bankers that focus strictly on doctors and physicians and starting those particular practices. So that's where things are set up a little different because we bring in our eco partners. So we want to introduce you to different parts of the bank, different members of the bank, and see who can contribute and really try to help your relationship at sort of like a family. Everyone specializes in something different. They bring something different to the table, and we try to assist you in any way we can to get you to that next level, right? So business bank accounts come in a variety of options, general categories, each of which have multiple sub options at most banks, including checking accounts, saving accounts, investment and money market accounts, credit debit cards, checks, deposit-only cards, online business banking, employee checking accounts. All this is true. So there's a variety of types of accounts that you can get into. I'll give you an example. Your circumstances changes when you set up a relationship. We talked about this yesterday. Your financial life has some type of effect or some type of change, whether it's for the better or the worse, every 6 months. Just about every 6 months, something's changing financially in your life, right? So the same is true with business accounts. The business could be growing at an exponential rate, right? Or it could be at stagnant and not finding a place to get to the next level. Well, it's important to talk to your banker when you go through those different phases. Why? Because we have different accounts to cater to different business situations. If you have a particular account that's providing you a plethora of services, but then you need to keep a certain balance in that account, but now your business is not doing so well so that you can get that account where it doesn't cost you anything or cost you very little, we need to reevaluate and say, okay, well, what else can we put you in to keep costs down for you, but still provide you some level of service? So all of these are so true, even from the credit cards. There are different credit cards for different things, personal or business, right? I always say you just don't get a credit card just to get a credit card. You get cards for purposes. So if you tend to go, let's say I'm gonna use this as an example. If you travel a lot, you want to get a card that caters to your traveling. There are cards out there that actually pays you for traveling. They give you Sky Miles, or that you go overseas, you use that card and you do a withdrawal from an ATM. There's no cost, no foreign exchange cost for using that card. Find a card for the purpose for your business. If you have a particular business that involves a lot of traveling, then you want a card that gives you cash back on gas because you might be putting a lot of gas in your car to travel. So don't just get a credit account just to get a credit account. Use cards that have a purpose so that it can save you money.
Roger. Real quick, I wanted you to interject about the card. Let them know too, when they're using their business card and their personal card, the difference between, meaning if they use their business card, they get a write-off. They use their personal card as a personal expense. Let them know the differentiation between the two so they understand that, it's kind of better during the day or doing just whatever you're doing to use your business card for business stuff and what could be a possible business transaction, please.
Absolutely. Good point. So this is what we talked about yesterday about credit cards. Most people see credit cards as being a bad thing, right? It's really the way you use credit cards, right? It's the way cards are used. And to what Mr. Glover was stating here, the credit card's purpose really has three really good purposes, right? If it's used in the right way. If you use the card to float you over for 30 days, okay? This is where some places there's a credit card and there's what they call a charge card. American Express is known as a charge card because most of their cards, not all, but most of them, you have to pay off that balance at the end of the month, okay, within 30 days. Credit cards have revolving balances where you can keep a balance on there that goes from month to month, and you just make a payment as you can till you pay it down, and then you continue using it again. Well, in the business world, that 30 days means a lot. Here's what that 30 days can do. We tell our business clients, put every business expense on a credit card. What does that do? Number one, it protects the money in your account. All right. If you're charging anywhere from $5,000 to $20,000, or you're using that out of your account to keep your business going by buying inventory, traveling, getting expenses for the office, whatever the case it is, anything business related, paying for your internet services, you want to put it on your card. You don't want to use the cash in your account because you deplete the cash in the account when you do that, number one. We look at the average balance in your account when we give you a loan. So if you're using that money on a regular basis every day throughout the month, that average balance goes down. Whereas you put it on a card, that average balance stays up. And then at the end of the month, you just pay that balance down to zero on that card. This does two things. It keeps your average balance up, and it also keeps you from paying interest on that card. If you pay that balance within 30 days, there is no interest charged to you. You just use money for free at that point, right? And it's organized. At the end of the year, you get a year-end statement, and that statement shows you what you're spending your money on. X amount of dollars on traveling, X amount of dollars on entertainment, X amount of dollars on inventory. This is good for income tax purposes because when you go do your taxes, it's already laid out and it makes the job easier for your accountant so you can write off certain things. At this point, you keep things pretty simple and clean. You just got to keep track of how much you're spending on the card, but making all the charges on the card and paying it at the end of the month is the best way to go. And I say this for the personal side as well. Nothing changes with that. If you're responsible in paying off the card, all your regular expenses, all your little expenses that you can put on a card, put it on that card. Take the cash rewards. Many of these cards give you cash rewards. At the end of every year, I typically get anywhere from $800 to $1,200 in cash back. That's what I use for my Christmas expenses. Really, the bank is paying me to use their card. But the key is to make sure that you stay within limits and not overextend yourself and know what your limits are. Hopefully that answered your question in regards to that and see the importance of that. So
That was perfect.
Perfect, excellent. So do you need quick lending? So now some businesses have a smooth flow of expenses and revenue and only need lending for major expansion, renovation, or project. Very true. So there are different types of loans that are out there. Again, with the bank, what we typically look at is we look to see that you've been in business at least 2 years and you've got some kind of revenue coming in. And we also use a ratio. We use a ratio of 1.7, right? 1.7 ratio. Sort of like saying, and that varies. I don't want to, say that that's what it is all the time. But for every dollar that's going out, there's $1.70 coming in, right? You're not going to lend anyone that for every dollar that goes out, 90 cents is coming in because that business is obviously something's not doing right? It's going in the opposite direction. We want to make sure that you can pay us back. So we look a lot of financial information to see how you can pay us back. And then when you have collateral, your loan interest rate tends to be lower because we have something that we can hold on to. Collateral is anything like equipment. It could be a vehicle. It could be a property that you have for your business. Anything that you can put up and say, hey, I have this. This is how much it's worth. I want to borrow against this so I can keep my business going. In many cases, a bank is not going to be your solution to get lending. Sometimes it just really isn't. This is where you lean upon SBA lending, government assistance, grants that are available to you, just something to kind of get you going so that when you get to the level of the bank, you can go forward. Let
me interject real quick. Roger, we have 2 students just entered the classroom. I'm multitasking. I'm doing physical and both virtual world this year during these unprecedented times. So we have Delicat from yesterday as well as Brian. They'll be participating as well. So just to let you know, give you a heads up.
Okay, well, welcome, please. And I'm going to get to a point here where I'm definitely going to open it up for questions. Please ask your questions. Be more than happy to assist. Even if it's something I did not discuss, please ask me, and then we can go from there. So again, back with lending, this is where the importance of understanding the amount of cash that you need, whether it's going to be short term or long term. This is where you sit with someone to determine the best option for you. The credit cards are short-term lending needs. This is basically 30 days, preferably 30 days, right? If you need it a little bit longer, I would say you could possibly use a credit card for less than, my rule of thumb is less than a year. If you're going to keep a balance more than a year, then you're going to need something a little longer term because those rates on the credit cards are extremely high. I learned that going in college. My first credit card was offered to me in college. There's new rules now, new laws. You can't get a credit card by yourself at 18 years old. You got to get it with someone. Well, at that time, when I went to school, I was able to get a credit card at 18 years old. In fact, I remember the first card I got a $8,000 limit. Really didn't know how cards worked, but I maxed out that card. I maxed it out. I bought things I needed and then things I didn't need, really, that weren't necessity. But the monthly payment on that card was only $160. And you can usually figure out what a monthly payment is on a credit card. When you put the balance, take the first 2 numbers, multiply by 2, right? It'll give you an idea. So $8,000, right? You do $8,000. I'm sorry, the first 2 numbers, 8,080, multiply that by 2, right? You get 160, right? $10,000, $200. Gives you roughly an idea. It does depend on your interest rate, but it gives you a gauge of what your monthly payment is going to be. What you don't understand is that a majority of that goes towards interest. So if you've got a card with a 20% interest rate, 19% interest rate, right? You're paying $160 a month. And you're like, I can handle $160 a month. What you don't realize is $120 is going towards the bank. $40 is going towards the principal. So you're only paying it down $40 at a time, which will take you a while for you to go ahead and pay it off. So you got to be cautious on how you use credit and realize that, hey, if I'm going to borrow this is how long it's going to take me to pay it off. And how much is it going to cost me to borrow this money? How much is it going to cost me? If I buy a pair of sneakers, whatever they are, Jordans, whatever, and I pay $200 and I put it on my credit card and I don't pay that card off till the end of the year, a 12-month time frame, you didn't pay $200 for those Jordans. You probably paid $300 for those Jordans or $320 for those Jordans because you're the time that you kept the funds on there, right? Now, how much impact will your credit have? Credit is very important. I say, especially in the US, credit is more important than actually the amount of cash you have in the bank, okay? Now, it sounds a little weird. What's Mr. Roger? If I have $1 million in the bank and I have bad credit, I'm better off than somebody that's got an 800 Beacon score and only has $10,000 in the bank. I would say that's not true because the person with an 800 credit score has something. They can use leverage. Leverage is where you basically can walk into any place and say, hey, I would like this, I would like that. I can pay it over time. Great, you got a great credit score. In many cases, you don't pay any interest. Right now in these unprecedented times, there's dealerships. You can go buy a car right now. If you got the right credit score and you have some kind of income coming in, you could pay 0% interest on the car, right? So you pay whatever the sticker price is on the car, not a dollar more. This is why it becomes a little bit more important to understanding credit and understanding the importance of keeping your credit strong as opposed to cash in the bank. And if you have both cash in the bank and credit, then you're at the upper echelon of getting assistance and leveraging whatever you can, just about everything you can to get you to the next level. So real quickly, reading this here, if you're starting a business, all of the credit inquiries will be on your personal credit until you've established business credit. Now, understand this. When you have a business, you can go in and ask for credit for your business, right? But someone has to be the parent for the business, a guarantor, they call that. So just like if some of you students that are here may have some parents, they can add you to their credit card, right? They can add you to your credit card. That's how I actually got my credit started. My mom added me to one of her Burdine's cards, and that's what prompted me getting a credit card when I got to school, because I was added to her credit card and she took care of her payment on a regular basis. I got all the benefits of that, right? So in a business, you are the parent for the business. You can go in and you can get a credit card the day after you registered and got your business up and running. But they look at your personal credit as the parent to determine if they give you the credit card for the business. Now, once the business gets the credit card, you're the guarantor on that card. Over time, that business builds credit itself. But it would always need someone to sign as a guarantor for that business. And you want to keep that on the up and up, because when you apply for loans for your business, they look at both. They look at your personal credit and they look at your business credit to see where they both are. And they're both crucial in getting applying for anything, right? Minimum balance requirement. As we mentioned before, there are minimum balance requirements for some accounts. At PNC, we have three major types of business accounts, right, at this level. One requires as little as $500. If you keep on average, and there's a difference between a minimum balance daily requirement and then there's an average balance requirement, right? Here's the difference. So an average would be how much, if I take all my balances from day 1 to day 30 and I average them out, that's my average balance. Whereas a minimum balance requirement, daily balance requirement is, hey, your balance has got to be this or higher any day during the month. So if there's a minimum daily balance requirement of $500, and then one day out the month, your balance goes to $400, but then it jumps back up to $500, if that requirement is daily, then you'll be charged a monthly fee for having that account. So you have to determine which one's which with the bank. Do they have a daily balance requirement or an average monthly balance requirement? And there's different accounts that meet those criteria. Because some businesses, they may fall down to $1 in their account at one time. But when you look at the total cash flow coming in on a monthly basis, because it has some of them can be pretty high, then the average balance can be a lot more and cover them so that there's no monthly fee. So always determine with your bank what the requirements are, what the balance requirements are. Some banks, it's not even a cash balance requirement. Some banks says, hey, you get a credit card with us, you use that credit card for at least whatever, $500 a month or $1,000 a month. We'll waive off that monthly fee on your checking account because you're using the credit card. Because again, the bank makes money two ways on a credit card, right? They make money off the fees and interest that they charge the consumer. And they also make money for every time you swipe that card from the merchant. That's why some places like gas stations will say there's a card charge and a cash charge, right? Cash tends to be lower because they'll pay more.
Hey, Roger, real quick, can you let them know too the benefit of using a business credit card and the differential benefit of using a business bank card so they know the differentiation of the two and know, the pros and the cons of both, please?
Absolutely, absolutely. So business debit card, business credit card. And we touched a little bit on this prior to this as well. So your business debit card is tied to your checking account. Okay, that's the cash that's in your account. When you swipe that card, that money's coming straight from your account. It's getting approved and verified right then and there. When you use a credit card, you're borrowing money from the bank to say that you're going to pay it back. The benefits of using the credit card, and I always emphasize this with a lot of our business customers, using the credit card to put all your expenses on as opposed to using your debit card is, again, exposing your account with the use of that debit card. I've been a victim of scanner fraud where someone took my information from a gas station, right? And they used my debit card, which is what I was using to purchase gas with, and they made a ton of purchases. That money came out of my account. It took the bank 2 days before they gave me that money back temporarily so they can investigate. But I was out of my money for 2 days because someone used my debit card and the cash in my account. Had it been a credit card, they got to give the bank the money back. Don't have to worry about giving me the money back, right? I'm okay. You can do all you want with the bank. That's their money, right? So it's very, important to understand. Putting it on a business credit card saves you your cash in your personal account as a protection level, and also it also builds the credit for the business. It makes no sense getting a business credit card and saying, hey, I don't need it, I got the cash, but it sits there. A year later, you go to get credit somewhere else, you say, well, I've had a business credit card. Well, we're going to look at it and say, well, you never use it. We don't know if you can pay your bill on time. Part of credit is we want to make sure you're responsible enough to pay it on a monthly basis and to see how you use it. If you've never used it, just getting it, and this applies on the personal side as well, does nothing for you. Just having it does nothing. They want to see the behaviors. Behaviors is a big part of banking and approvals for lending. We look at consumer behavior. How does this person act? If you give me your tax returns, you give me I can see your credit score, and I get your bank statement. As a banker, I can tell you a lot about you as a character-wise, right? I can tell about how you take care of your finances just with those 3 things alone, because I can cross-reference and see, okay, this person is either a saver, this person is a spender, this person takes care of their credit, whatever the case might be. Right. I want to leave a little bit of time, Mr. Governor, for some questions. I do have a hard stop at 11:30.
Okay.
So
we're gonna
I'm
bring
going to
them up
open
right
it up
now
now for any type of questions.
Okay, 1 second.
Sure.
The first student is Smith Delicat.
Delicat. How you doing?
Pretty please come over here. Pretty please. Thank you so much.
Sure.
Good morning.
Hey, good
Good
morning.
morning. How are you?
Doing good.
I thank you for what you did. I hope you got my email that I sent you.
I did, and I told Mr. Glover I received it. I just couldn't reply back for security measures, but I did. Thank you.
Oh, and the beauty of that, from business to business, you'll be a future business owner. So now that's good business etiquette. When you have a future relationship with the banker, you want to always follow through and follow up and that shows class and good business etiquette. So now, when it's time for anything to come about, he's going to make sure that he calls Delicat Services LLC or whatever you're going to name your company to afford you any opportunity you need. It makes sense?
Yes, sir.
So do you have any other questions based on what you absorbed today, any knowledge or information you obtained?
Nah, now there might be a question that comes apart because I'm making my account.
Okay.
That you're gonna make it through.
Exactly. We're going to do it. And next, also, Roger, we're going to be talking about crowdfunding. They already have the crowdfunding information. Next week, we're going to be talking about crowdfunding because I know that with them in their position, first-time business owners, we have to take different measures to raise funds for them.
Absolutely, and that's what I talked about in the beginning. We typically the bank wants to see you can do it on your own up to a certain point before we step in, right? And this is where crowdfunding comes in. It actually gives the business owners that are just starting out with great ideas, great businesses, an opportunity to get funded, outside of the financial realm, right? And then if you take it to the next level, at that point, you can come to the bank and say, hey, this is what I did when I got crowdfunding. Now I want to use your resources, right? So yeah, definitely.
Perfect. Our next student is Brian. Brian.
Hey, Brian.
Dang, tell them, any business you want to own in the future, type of money you think you'll need, 100 grand, 50 grand, $1 million. I mean, the ball's in your court. I know you students always talk about getting the bag. We bringing the whole bag right in your lap. We putting the bank right here for you, So step in front of the camera and let them know, tell them thank you for doing what he's done. Pretty please stop that with that.
Good afternoon.
Afternoon.
I like to thank you for what you've been doing. I wasn't here with what you did, so I really don't know.
Now the recording, I sent it out, so we have it recorded. You'll get to see exactly what went on the other day. But just based on the data, a little information you absorbed in reference to bank accounts, business banking, business credit cards, and things of that nature. Does that sound like something that you want to entail in the future?
Yeah.
Okay, so now you have a direct access, direct source, direct network to Mr. Roger, which is the vice president at the bank. And that's why I told you, at this campus, we have a great staff, students. We believe in working from the top down. So we're going to put you in direction with everybody from the top on down. So you have an equal and fair opportunity to win. You follow me? So that's what this is all about. Roger.
Right, definitely. I've got a hard stop, so I've got to exit out of it. I want to say, this, to the students in the room, you have access to so much nowadays. You really do. This is you have opportunities to chase your dreams at this point. Warren Buffett, if you guys know Warren Buffett, right? Investor, right? Major investor, one of the top 5 richest persons in the world, right? He started investing, I guess what age?
14.
11 years old.
Whoa.
That's when he started. He bought his first stock at age 11. I got a 10-year-old, right? I would be doing a distrust if I don't educate my son on these matters. And this is what I do, right? So understand you have those that are available to give you that information and to give you it. So once we give you the information, what you do with it is up to you at that point. But it's really information. Information is power. It's key. Understand you have access to it, just getting the information. And if there's something that you're not good at, it's okay. Some of the top business owners, Rockefeller, Gerald Ford, they always said, hey, I don't know the answer to that, but I do know someone that does, right? You just made that phone call, right? So just realize this, it's totally accessible to you. I will admit, in college, I wasn't the best guy in math. I really didn't. I had to take business calculus twice, to be honest with you, right? But I took finance. You know what made the difference for me and things started clicking for me? One symbol, that $. This is the truth. They put $1 in front of it. All of a sudden, it made sense to me. All of it did. So just understand they're buzzing me right now because I got to get on a conference call.
Real quick.
Understand it's available to you
Let
guys.
me just
Thank you for the time.
One sentence, one word. Thank you again. This is Mr. Jedi. I'm the principal of the school, and I really appreciate you coming here, informing our students, and giving them all the information that they need, because education is the only thing that will take them to the next level. Thank you,
Mr. Judy. I appreciate
No
that.
problem.
Thank you. Thank you.
That's our principal, Roger. So he's going to facilitate to make it all happen for us. So We'll
Thank
be
you.
later. Thank you so much.
All right,
All right.
thank you, folks. You guys have a good
No
one.
problem.
God bless. Have a great
You do
weekend.
this. Bye-bye.
All right, bye.
All right, students, you all did great. Definitely let's send Roger again a thank you email, which is in the Google Classroom.